All right, welcome to Walle's World. I think we ought to call this Walle's FAIRtax World, okay? We'd like to introduce a gentleman that we ran into a while back here in the FAIRtax movement, Jade Walle, who is a genuine certified CPA, and he is here to share his views on the FAIRtax from a CPA's perspective. Hello, Jade. How are you doing?
Good, Bob. How are you?
Well, except for Alabama losing to Auburn, we're fine.
I mentioned Oklahoma State lost to OU, so I feel your pain.
Oh, well, it does happen. But you have been a CPA for a good little bit. Go ahead and kind of expound on your background a bit.
You bet. I'm a CPA licensed in 3 states, Oklahoma, Texas, and Colorado. I started my career with a Big 4 public accounting firm right out of college at Oklahoma State with my bachelor's and master's in accounting. So I started in the Tulsa office of my firm, went abroad to London for a couple of years. We were helping non-U.S. companies go public in the United States and bringing U.S. accounting expertise to those foreign private registrants and helping them access the U.S. capital markets. Repatriated to Houston in 2002. In 2008, the firm asked me to make my run towards the partnership and relocate to Tulsa, where my wife and I's families were and where we'd have babysitters for our young kids. And so it was a good situation for me then. And then just a few years ago in 2016, the firm asked me to relocate. The sector that I have experience in needed some more partners in Denver. And so my wife and I and kids were up for the adventure. And we've been here in Denver 3.5 years now, and 23 years with my accounting firm straight out of college.
All right. Well, that sounds like you know what you're talking about when it comes to crunching the numbers. So one thing that we hear all the time, FAIRtax volunteers hear all the time, the FAIRtax is going to put CPAs out of business. Bust that myth for us.
Yeah, it's a good thought, and you would think that right off the bat, right? Because people assume CPAs are a certain type of person. You see, I call it the sitcom persona of what people assume CPAs are. I actually do have glasses, as you can see here. And that is certainly the perception, and maybe with some tape in the middle of it.
And a pocket protector and a slide rule too, right?
That's right. Pocket protector, slide rule, bean counter, glasses with tape. Now, believe it or not, there are some accountants like that. But accounting is such a dynamic field, and the licensure of a certified public accountant is so dynamic. I know CEOs that are actually CPAs, many chief financial officers, CFOs. It's really a dynamic field. In a Big 4 public accounting firm, there's different lines of service: consulting, tax, and then attestation, which primarily includes auditing either public companies or private companies' financial statements, signing an opinion that those financial statements are free of material misstatement and in accordance with GAAP, or generally accepted accounting principles. So what that entails is being able to manage a team, project manage, client relationships, holding the line on quality, but still having a fruitful relationship, business development, coaching, you name it. So it's actually a very dynamic field. So having said all that, I can tell you that there's a wide swath of perceptions when I talk to other fellow CPAs about the FAIRtax. But the one consistent answer is, after I have 5, 10, 15, sometimes 30 minutes to explain it, whiteboard it up on the wall, everyone's like, yeah, that's great. And so one of the partners, I'll give you an example. One of the partners of mine at my firm that I spoke with, he's a deals guy. Capital markets transactions, running deals, acquisitions, divestitures, building companies. And I talked to him about it, and I could see his eyes, his brain was working. He's like, wait a minute, this encourages savings, it encourages investment. This is going to be gangbusters for the economy, because you're going to have all this, let's say, encouragement through the code or lack of tax code, no taxes on savings, no taxes on interest earned, no taxes on investments. This is going to be, and this is only with him knowing only part of the facts, really, not the whole embedded taxes and all the other aspects of the FAIRtax we'll get into, just the effect on investment and savings. He thought it was going to be gangbusters for the economy. So I can tell you as a CPA, when you look at the facts, I think most CPAs would be for it. Now, I'll also tell you, the AICPA, that's the American Institute of CPAs, they came out with what the ideal tax system or tax regime would look like maybe 10, 15 years ago. And all of the bullet points of what the AICPA came up with, it would be efficient, it would be fair, all of the bullet points, and there's about 6 or 7 of them, the FAIRtax just checks them off one by one, and the current income tax code doesn't. So hopefully that color helps.
Oh, absolutely. So the common perception that CPAs only do taxes is just not true.
Absolutely. The majority of people at my firm, which is a very large public accounting firm, aren't in tax. Tax is a significant line of service, but there's 2 other lines of service, consulting and attestation or audits. And together they're much larger than our tax line of service. And I can tell you, I actually have tax colleagues at my firm, and I talked to them about the FAIRtax, believe it or not. And while there's some trepidation about their careers if the FAIRtax were enacted, they get it. They understand it. They think it's a good plan.
Yeah, well, picked up earlier, you said that most CPAs would like the FAIRtax idea, and that brings me back to last spring when we were out there in Oklahoma with you guys talking to your FAIRtax class. You might want to elaborate on that a little bit, but a very significant majority of the CPA students who really don't have any skin in the game yet, but most of the students, once they understood it, they thought the FAIRtax was a good idea.
Absolutely. So I've gone back to Oklahoma State. They ask professionals to come back and teach kind of an ad hoc practicum class every summer. It's like a 2.5-hour day. And this past year with you guys, we actually had 2 days at the class. And so we go over the FAIRtax, and we get to go in fairly good granularity for 2 hours. And at the end of it, I always poll the class. What do you think about the FAIRtax? Now, everything always depends on audience, right? When we're delivering a speech, a written proposal, you always have to ask the first question, well, who's the audience? This is an audience of probably 1/3 to 1/2 professional tax concentration CPA students getting their master's degree in accounting at Oklahoma State. The other half probably going into audit and attestation and other aspects. So you get up to about half whose livelihood is going to be dependent on the IRS and the income tax code. So understand that audience. So it's, at the beginning, at least a tough audience, you might say. And every year, this past year, I think it was 16 of 24 raised their hand at the end of the 2 hours, said, you know what, I think the FAIRtax is a great plan. I'll tell you, in the summer of 2018, when I went with one of my colleagues, about 20 students, 100% raised their hand.
I'm saying this last year is about 2/3. The year before that, it was close to, if not unanimous. These are
unanimous the year before. Yeah.
Students thinking that the FAIRtax is a good idea. So, first question: why? Why is it such a good idea from a CPA's perspective?
That's a good question. I always, maybe I'm a little biased, I always tend to gravitate towards the economy. The economy is such a huge part of our country, our livelihood, how we function as Americans in this world that we find ourselves in. And so you have to think, well, what would the effect on our economy at a macro level, at a personal level, at a jobs level be? And so I tend to go to a few things. So slide 3, which I've prepared for this presentation, talks about what do economists agree almost unanimously about what would promote economic growth. And you say, well, Jade, why do you care about economic growth? Because again, if we have economic growth, we have a rising tide, we have people benefiting from the economic growth that otherwise wouldn't have, which it makes everyone's life better. And it provides a greater degree of the American dream, opportunity, and really meaningful change in people's lives. So that's why economic growth.
And you've got more people needing your services if the economy's booming and businesses are starting.
That's right. I'll backtrack for 1 second. When I talk to my tax colleagues about the FAIRtax, I say, listen, guys, we'll have a 0% corporate income tax rate. You're going to have the tax haven of the world. You're going to have an economy that's so hot, we're going to have deals left and right. I promise you, we'll have jobs. Even though the tax line of service will go away, we'll have more jobs than we have people for. And actually, this is what we call a first world problem or a good problem. We'll have so much work, so many jobs, so much business here in the U.S., we'll need to increase legal immigration tenfold. We'll have to really reform that system. And you're going to have an economy that's almost overheated, where the Fed will actually have to embrace policies and deal with problems that it's never had to deal with before. When we're talking, unemployment even lower than it is now, and it's at records right now, just not enough people. And you're actually going to have an overheated economy. You have to worry about things like inflation, et cetera, because it's going to be so dynamic under the fair tax. So again, good problems. We'll let the Fed deal with that after we enact the fair tax. But back to your question. So what do economists agree that the three main factors that promote economic growth? Guess what? Replacing an income tax with a consumption tax. Bob, does the fair tax check that box?
It does.
Replacing a graduated rate system with a flat marginal tax rate system? Check.
El Checo, yes.
Lower marginal rates and a broader tax base. This is one of the reasons that I love the fair tax. When we think about our current income tax base, it's pretty much exhausted. You can't tax the wealthy, the 1%. And I know we're into this political season. A lot of people talk about maybe raising the marginal rate to 80, 90% on the 1%. But there's only so much you can do without, stifling the economy, having a revolt, etc. You can't go expand the tax base on the working poor. That'll go over like a fart in church. That's just not politically feasible, right?
That's not going to happen. Yes. All right. I don't know if you're familiar with this. We saw some research a while back. I think someone at the Heritage Foundation crunched these numbers and says that if you took every dime from the wealth of every income, if you capped income to $200,000 and capped everything above that, tax that at 100%, you still could barely make a dent in the national debt. So let's just tax the wealthy. The numbers just don't work. I mean, you could take every dime. Think of it, every dime above $200,000, and of course, if that were the case, people would quit earning at $200,000, and the tax would bring in nothing. So
I'm familiar with that. You're right. You're right. Well, with the fair tax, so with the income tax, we're anywhere, I think, at about a $5 million tax base. Now, actually, with income, that would actually be higher. It would actually almost be double that. But when you think about the tax code and all the exclusions, deductions, loopholes, and other mechanisms to lower that taxable income, you get a tax base that's almost cut in half. And again, that's the way the system works. The home mortgage interest deduction, for example, is a huge lowering of the tax base. With the consumption tax, the fair tax, we have a tax base that's not quite, but almost doubled. When you think about all the consumption, and even considering the prebate, which will refund everyone's taxes paid on the basic necessities of life up to the DHHS poverty level. When you think about this, you have an almost doubling of the income tax base. So all the illegal underground economy, anyone who's in the U.S. illegally, all these folks that don't file a federal income tax return and pay their fair share, they have to consume. They have to go to Whataburger or McDonald's and grab a burger. They go to Home Depot and Walmart to buy the basic necessities of life. They'll finally, at the register with the fair tax, pay their fair share in their basic tax obligations with the fair tax. This has a tremendous effect of expanding the tax base by which the fair tax collects. So it's almost double. And with the income tax, you just can't expand the tax base anymore, like we went over. It's not politically feasible. Might be right, wrong. You can argue about that, but it's just not going to.
There's just not enough dollars there, so you could just about take them all, and it still wouldn't do it. Talking about expanding the tax base a bit, expound on that as it relates to Social Security and Medicare.
Sure. I love to use one example, and let's just say Bob Paxton. You are independently wealthy, You
that sounds
invented
good.
this wonderful. You invented a wonderful locomotive engine that set the world on fire.
Yes.
And you are independently wealthy. We're talking billions in the bank.
Well, keep going. Keep going.
Yeah. So you don't really have a W-2 anymore. You're not an employee of any kind of firm. You're just really collecting capital gains on your investments, maybe some interest earnings. And as you know, or let me ask you, if you're just collecting capital gains, Mr. Wealthy Bob Paxton, are you paying your FICA, that Social Security and Medicare tax of 7.65% in any kind of paycheck?
Not a dime.
Not a dime, but you're really wealthy and could probably afford it if you take the progressive's view. So let's transform that into the FAIRtax scenario. Bob Paxton, independently wealthy, that locomotive, it really set the world on fire. Good job, Bob.
Thank you.
But now you spend like a rich person. You have a yacht in the Mediterranean. I don't know if you knew that. You have a yacht and a whole fleet of wonderful cars, and even some locomotive models, mansions in Tahoe. You actually have one in the Colorado Rockies, so you and I could go ski together sometimes.
Oh, that sounds good. We'll have one at Lake Eufaula as well.
Yes.
That's kind of an inside joke. We were going to go there this past trip, but we got flooded out.
That's right. Next time, rain check.
Indeed.
But cancel the rain. So you've spent a lot of money on all these purchases. Well, guess what the FAIRtax Act has in its innards? And I've read it. It's not that many pages, actually, if you scan through the pages of the FAIRtax Act. There's a certain percentage, and I can't remember if it's around 30% of every single dollar collected on the fair tax is earmarked for Social Security and Medicare, meaning those programs, although you're not having your payroll tax withheld anymore and you're getting your whole paycheck, those programs are intact. It doesn't do anything with those programs. And as a matter of fact, those rich people who are just collecting interest and capital gains and appreciation who aren't earning a paycheck, they're back in the game of funding Social Security and Medicare, which puts it on a more solid footing because everyone who consumes is paying for Social Security and Medicare now, and that's not the case in today's world.
Absolutely. I tell you what, you don't have to be a proponent of the fair tax for long, and we explain to somebody that it makes those payroll taxes go away. It's really quick. Somebody says, oh, the fair tax is going to kill those programs. There's no more funding for it. You don't know whether that's just ignorance or just willful misrepresentation. But anyway, let's get back onto your how does the CPA view the fair tax. I'm looking at your next slide about the economic professor's analysis. Go through that for us.
Sure. So a couple of PhDs, doctors, Dr. Dale Jorgensen, and I think the other one is Lawrence Kotlikoff. These guys have studied this, and you ought to see the pages behind their studies. I can't get through it all. It is, you're using those symbols from statistics that are basically Greek, literally and figuratively, and they've done $20 million worth of grassroots research. And so what are the results? So I love this too, Bob. A couple years ago, we got the Tax Cuts and Jobs Act passed. Remember when they were going through that cycle? It's like, oh no, we have to wait 48 hours for the Congressional Budget Office to score the effect of this. We don't have to do any of that. The research is already done. This is revenue neutral, actually revenue positive if you really look at all the things that aren't considered in the analysis. And so we're done. We're done with that. And here's the result. So if we go to slide 4, labor supply up 4%, capital stock up 42%, output up 12%. Everyone's more productive. There's more action in America. Real wage growth up 8%. Can you imagine real wage growth? That's really what's in your pocket. Up 8%, our economy would be on fire, almost too hot to handle. Again, good problem to have. Consumption would actually go down in the first 2 years based on the study, but then up. A lot of people worry about that. Oh, if you're going to encourage savings and you're going to tax consumption, is consumption going to go down? The first 2 years, barely by less than 1%. And then up by 4% by year 10, and up by 6%, consumption up 6% by year 20. After enactment, real GDP increased 10 to 11%. Employment up 11%. I don't know how much higher we can get, but fair tax would actually do it. That's why we need more legal immigration. And here's the kicker. This is the ultimate figure. It's called disposable personal income. This is what's left in your pocket after your taxes, after your withholdings or lack thereof, after the economy. It's up 9% by year 5, 12% by year 10. So basically, you're going to get 10% more than you have now in your pocket for the typical American. Does that sound okay to you, Bob?
That sounds wonderful to me. So what do you tell these Weasley politicians that try to say, well, fair tax sounds like a good idea, but it needs more research? Those guys don't know what they're talking about.
No, and I think that's where we have to politely remind them of the research, have a few moments to go through it, and then you get to that next level of understanding, like, oh, okay, I think you and Ron in your FAIRtax Power Radio episode 177 a few months ago were talking about politicians and holding their feet to the fire.
Mm-hmm.
And remember, they made a campaign promise. I think what one of the volunteers had emailed into you and was talking about, hey, they made a promise, went back to the town hall, held their feet to the fire. It takes all of us doing that. This is such a good idea that if we get enough pressure on the politicians, they'll go along with it easy, guaranteed. They just need the pressure.
Well, I think the one thing that's going to get to the politicians quicker than anything else is pointing out the evasion. They love to spend money, and if the current income tax system is leaving literally billions of dollars on the table that they can't spend, that's a problem in their eyes.
Absolutely. I'll take us to slide 2 here. A couple of thoughts on evasion. It's near and dear to my heart and probably most CPAs' hearts, right? Because we tend to be individuals who are concerned about the details and concerned about what's right and what's wrong. And not that things are black and white. There's lots of gray in accounting and in life and in taxes. But it's wrong that we have 20 to 25% evasion rate in the U.S. That means basically 1 out of 4 people don't pay their obligation to the federal government under our current income tax regime. That's wrong.
That's an astounding figure. How do they get away with it?
We talked about some of the other things earlier that the fair tax will help us with, the criminal underground economy, and folks that are maybe in the U.S. illegally, not even filing a federal income tax return. It just goes away as you consume. It's simple. It goes away. And in golf, Ron is a golfer, right?
Yes, he is.
Your FAIRtax Power Radio buddy.
Mm-hmm.
There's a phrase that Ron might remember from golf called "take the hazard out of play." So
he's looking at me kind of funny. Take the hazard out of play. Have you heard that?
Oh.
Okay. He's heard that.
So you're lying in the middle of the fairway, and you've got a shot to the green, but it's right over the water. And maybe you go left of the water, you keep it straight, and then you shoot towards the flag on your second shot. Maybe it's going to take 1 shot longer, but you take that water out of play. Maybe you can fly the water, maybe you can't. Well, this is what the income tax does and the fair tax relative to it. If we think about what motivates evasion, this is getting to basic psychological facts. So we have a mechanism that in financial statement auditing we look at when we think about fraud risk. And anytime there's fraud present, and make no mistake, income tax evasion is fraud. You're defrauding the U.S. government.
Yes.
When 3 things are present, fraud is going to always be present. We're going to have incentives or pressures, rationalization or justification, and the most important stool or leg of that 3-legged stool is opportunity. So I always use the example, if the cash register drawer is locked, someone doesn't have the opportunity to steal the cash out of the drawer. The control is they keep the cash register drawer locked. Okay, now if it's always kept open, the opportunity is there to steal that money. So let's think about the income tax. Is there opportunity to defraud the U.S. government? Well, you've got close to 200 million individual tax filers, 100 million businesses in the U.S. if you count all the sole proprietorships and small mom and pops. So you've got over 300 million individual tax collectors for the U.S. government. Just think about the sheer magnitude of opportunity to defraud the U.S. government. A lot of it happens inadvertently. Some of it happens actually intentionally. And I think of people I've talked to in small business where they actually feel that they're already taxed enough, and so if they put that truck on as a business expense and lower their taxable income, they feel justified in that. And so that leads us to the other leg of the fraud triangle, we call it, the other leg of the stool, which is rationalization or justification. If we feel like the tax system is broken, IRS treats us horribly, civil asset forfeiture, etc., we're going to feel justified. Not that it's right, not encouraging it. It's just the way human psychology works. And so you get the system that psychologically encourages you to defraud the government and gives you the opportunity to. Now, and let's go a little bit deeper on the psychology. There is Adam Smith, author of The Wealth of the Nations in the 1700s. I love his quote. He talks about the property which every man has is in his own labor. So he's talking about you as you work and you labor. It's the original foundation of all your other property. And that makes sense. So anything you get and acquire, it's because of your labor. So it's the most sacred and inviolable. So what that means is, to us, when we labor for something, that's sacred to us. That's almost as near and dear to us as our family, the way our minds work. And so you're taxing our income, you're taxing our labor, and that's where that psychological predisposition manifests itself into wanting to defraud the U.S. government, and bam, we've got the opportunity. And then the other third aspect is always present in human beings. It's incentives or pressures. Maybe I need more money to buy my kids more shoes. You can just come up with it. We're really good at either having real pressures or fabricated pressures or incentives to want to steal and take more. We as human beings are flawed, right? We're greedy, and we have these natural flaws within us. And the income tax system just exacerbates all three of these points, which leads to more fraud. You want to go to the fair tax in this fraud triangle angle.
Okay, go ahead. So we're
okay. Yeah, so we think about opportunity, which again is the most important leg. Because if we have incentives or pressures, I need more money, maybe I've got a gambling problem, or someone's having an affair and they need to justify 2 lives and all these horrible things. If they have those, if they can rationalize and justify in their mind why it's okay to steal, that might be present. But if there's no opportunity, that's the leg of the stool that gets cut off, and there's no fraud. If the cash register drawer is locked, you're not getting the cash. Even though you might want to, you can justify it, you can rationalize it. So we think about the fair tax. If you go into Walmart, Best Buy, Amazon online, all of these places, good luck trying to say that you're not going to pay the sales tax upon checkout. Yeah, it's not going to happen.
Ron uses that example a lot. Try going into Walmart and going out with a big screen and telling the cashier, I'm not paying the sales tax. And they say, you're not getting the TV.
That's exactly right. Now, will there be fraud? This is what students, when I speak at universities, often bring up. Well, what about that, sole proprietor, that lawn guy? Hey, just pay me in cash and I won't charge you the fair tax. There will be fraud at the fringes because guess what? Human beings are involved. There will always be fraud. But best case or best estimate based on the studies I understand at this point, sales tax fraud versus income tax fraud, you're talking 1 to 2% versus 20 to 25%. Yep. There's your stats right there.
Yeah, people look at that and they say, well, it's going to create a black market and, people are going to defraud it. And you look at them, you don't think they're defrauding the income tax now? And that's all they get. And besides, with the way the fair tax is structured, your Walmarts, your Targets, your Amazons, they get to keep a very small percentage of what they collect. So they are incentivized to collect it, not help people evade it.
That's exactly right. Right now, 300 million tax collectors for the IRS. Do we get a dime when we send in our return and give them some money for our collection efforts?
Nope.
I don't think so. Now, the retailers each get 1/4% of everything they collect. 1/4%. If you're a Walmart or
I say that doesn't
Amazon,
sound like much, but if I had 1/4% of what Walmart sold, I could buy me a locomotive and a Learjet.
And then the states. So the way the fair tax works, you already have the local infrastructure in each of the states that collect the sales tax. They just now have one new category called the fair tax that they collect. And then the state, when it remits it, which I've read in the Fair Tax Act, if it's very large, it's as frequently as weekly, but for most probably monthly, remittance up to the federal government and the Treasury, they keep 1/4% for their collection efforts. So it's actually a boon to the states that they get reimbursed because a lot of the enforcement And again, it's not that prevalent with sales tax. It's more in the fringe. But a lot of the enforcement is already there in the state mechanism, so they get reimbursed for that work already. And the actual Treasury of the U.S. will have very little enforcement to do.
That works. And they're flashing me a sign that says used stuff, not subject to the fair tax.
Oh, that's right. One of the key principles of the fair tax is that an item, a new retail item, is taxed once and only once. And I love that about the fair tax. That sounds fair to most people. Every time I say that, it's like, oh, that's fair. And it's the reason the fair tax is fair. So there's actually, I feel we think about all these bills, laws, etc., that are trying to help our environment. And I love to recycle, and I want to keep the environment clean. I want to conserve it. And if you think about the fair tax, indirectly is going to be the most prolific bill when it comes to conserving our environment and recycling in the history of the United States.
Yes.
Because you're going to create this market for gently used items, clothing, goods, etc., because when you sell it to folks, it's already been taxed once when it was bought new, and now you're selling it without the fair tax, which works to actually increase the prices because the demand will go up for those items. And then what it does, then you say, whoa, will the market for new items go away? Well, no, because the market for new items becomes closer and closer to that market for used items as the used prices go up because of demand. And then you get to an equilibrium such that it's close enough where you get those folks that are a little bit more affluent that just, let me just get the new one. And you'll get to that decision point, which keeps the entire economy rolling along. So yeah, I think it's going to be a boon for used items market. Now, of course, services, there's no such thing as a used service. You get it, you consume it, you're done. But when it comes to products, absolutely.
Okay, I'm looking ahead at your other slide here. Other effects of the fair tax on the U.S. economy. You got some pretty good stuff there.
So slide 5 here, we talk about the underground economy and offshore funds. If we have 0% corporate income tax rate and absolutely zero incentive to keep funds offshore, you're going to have a flood of money into the United States. All the Cayman offshore, Swiss bank accounts, all the reasons you might try to keep money offshore. In the tax world, there's incentives to keep money offshore because unless you're, going to have it permanently invested offshore, and you're going to get taxed on that. So companies actually create reasons to invest outside of America because of our tax code. It's counterintuitive. But with those aspects of the tax law gone, you're going to have a flood of money, which leads to more investment, which leads to more jobs, more companies. You talk about foreign multinationals coming here. You're going to have 0% corporate tax rate, and then no taxes along the value chain and all along the supply chain because all the income tax and payroll tax is eliminated, which actually works to reduce the price of everything you sell. It finally puts America on a level playing field with foreign competitors. For example, in Europe, when European companies sell a product outside of Europe, all the VAT, the value-added tax that is built up along the way and included in that price, say 20 to 30% of that widget, the government refunds it to that European company, and so the company selling abroad has a price advantage because those embedded taxes along the way are refunded. So that European competitor versus my U.S. company doesn't get their income taxes and payroll taxes embedded in the cost along the way. They don't get them refunded. So we're at an automatic disadvantage. Our prices of our products are much higher. It's amazing our trade deficit isn't double what it is, which is already horrible. So now with the fair tax, those embedded taxes are gone. The income tax and payroll tax are gone out of the price. No corporate income tax. You're finally on a competitive playing field. And I would venture to say, Bob, that I would take a U.S. product over a non-U.S. product, and let's see who the best winner is. If we're on a level playing field as far as cost buildup, I'll take that American product most any time. Maybe some products here and there might be an exception, but I'll bet on America.
Indeed. Well, we just did a Fair Tax Power Radio episode comparing the fair tax to the VAT because we hear so many people say, "Oh, that's just like the VAT tax, isn't it?" Nope, not even close.
Not exactly.
So startups or small businesses, innovation. This is just all kinds of stuff's going to happen with the fair tax.
Yeah, and so also here we talk about compliance costs. We spend $600 billion
That's
a year.
a big one. That is a big one.
And 8.9 billion hours based on the latest data that I have. 8.9 billion hours of yours, mine, Ron and Elaine's truck leasing business back in the day, keeping their books and the tax forms. And then all the corporations. Sometimes there's corporations with floors of payroll tax and income tax accountants, or at least an entire floor. And you think about, what could that time, energy, money be spent on? R&D, innovation, raises people's salaries, lower costs at the register for you and I, and also just the productivity of us as America. What great inventions will we have in America because we're not wasting 8.9 billion hours of our time on silly compliance. Now, I think there'll be minor compliance for businesses. If you're, going to file your consumption report to remit if you're a sole proprietor or maybe a partnership or a small business, you'll have very small compliance. That 8.9 billion comes down into the millions of hours. We're talking exponentially different. And the interesting thing, Bob, when we look at the fair tax studies and how prices of everything come down because embedded taxes are removed, these $600 billion in costs that companies spend each year are not included in that economic analysis. This is what I call bonus cost reduction that aren't even factored into the analysis. So when we think about the effect of the fair tax on the economy and productivity, there's aspects of it that are going to blow us away when it's enacted.
Well, getting back to the impact of the fair tax on CPAs, I would think that most CPAs would find tax work extremely frustrating simply because of the sheer complexity of the code they have to deal with. You're familiar with the Money Magazine study where they gave the same mythical families information to 50 tax preparers and got 49 different answers. And you're on the hook if you do that guy's taxes that, hey, I've done it right. That's
right. And what are we at, Bob? 77,000 pages
something
of
like
legislation, code, and tax court rulings altogether?
Yeah, well, about there, yeah.
Yeah, and you're technically responsible for all of that as an individual and as a tax preparer or reviewer. And I talk to tax colleagues, and they're working late there's October 15th deadline, September 15th, April 15th, and if there's a partnership or corporation, individuals, there's all these different deadlines. And they grind away. Certain things in the code are ambiguous, which end up in the tax courts. There's certainly a level of unfairness in civil asset forfeiture. You and Ron have highlighted Carol Hinders and her cash-only business, I think it was in Iowa. And just the aspect of our Bill of Rights and due process, illegal search and seizure, right to trial by jury, all of these things in our Bill of Rights and our individual rights that make America so unique are completely stripped away when it comes to the income tax code and your rights as a taxpayer, because in theory your dollars that are being seized and frozen are the ones who are guilty of a crime based on an arcane legal concept, which is just ridiculous, and it's unfair, and all of that goes away with fair tax.
And then we did a Fair Tax Power Radio episode a while back called How Money Walks. It was some, are you familiar with that? It was a study on how tax policy affects population and wealth. And you could see that in the high tax states, they're losing both. Low tax states are gaining both, and you could scale that up to the entire planet. And if the United States had the fair tax, we win big.
Absolutely. And you bring up a point. I had a friend from Australia, a longtime friend, lives in Sydney, and we were skiing for a couple of days in the mountains. And he knows I do some of these webcasts. So what's the fair tax? So I said, I hesitate to talk to you about it because I don't want this idea to catch on in Australia or any other country. This has to be an America first situation.
Bort's got the same thing. Somebody was asking him about a foreign country, was asking him about it, and he wouldn't tell them.
Yeah, it's first mover advantage, what we call it in business, right? If we're going to be the tax haven of the world with a 0% corporate income tax rate, the first person there is going to get more of the influx of economic growth and stimulus.
And I think we're going to see that in spades with Alabama and Georgia. Are you familiar with the efforts there? Both of those states are looking to replace their state income taxes with a FAIRtax model consumption tax. And go ahead.
yeah, Bob, I'm excited about that. If Alabama adopts that, I might actually have to move to Alabama and start watching Crimson Tide on my television, and it goes against my grain, but I'd be willing to do it.
Hopefully, we're going to get to go up there to Alabama and talk to the folks that are behind that. That's not set in stone yet, but we're going to work on that. But
nice.
we're getting close on.
That's exciting.
We're getting close on time here. Want to be sure that if there's anything else you wanted to get in, you had a chance to do it.
Yes. So. Looking here at the slides, if we look at slide 7, just a couple of other aspects that permeate everything about our economy and us. With the fair tax, individuals will keep their entire paycheck free of federal withholding. That's FICA, that's the Social Security, Medicare, and the federal income tax withholdings. That's a huge, huge aspect. And when you think about, I think one honest question that I receive sometimes is, well, you're not going to have a deduction for charitable giving, so that's going to go way down. And if we think about it, us as people, when do we give more? When we have more money in our pocket, or if we have less money in our pocket after receiving a paycheck that has more withholdings? And when we think about it that way, you can see where I'm leading you. Mm-hmm. But there's actually a study based on those times when our marginal tax rate back under Jimmy Carter, and the marginal tax rate was actually very high, I think up to 80-90%, meaning your charitable deduction at that time was worth a lot more because you're going to shield whatever your charitable contribution is, that much income from a 90% rate. So very valuable deduction back in the day. Well, what happened when that marginal rate went down and your charitable contribution, in theory, is worth less of a deduction as you got into the Reagan years and into the 90s and in the last decade? Guess what? Charitable contributions actually went up during that time.
When people have more money, they care about the cause more than they care about the tax deduction. And when they've got more money to give, they do it.
That's absolutely right. So just one great thing, you think about charitable, you think about the fair tax. When you donate to a charity, you're not going to pay the fair tax. If I give to Junior Achievement in Denver, and shout out to Junior Achievement, great charitable organization to teach young kids financial literacy. I'm on the board here in Denver, love the group. But if you give $1,000 to Junior Achievement, you're not going to give $1,000 plus the fair tax. Obviously, that will still be tax free, just like your education.
That's not a retail purchase.
It's not a retail purchase. I love also, Bob, just in this slide 7 here, the working poor, finally untaxed. The working poor, you and Ron talk about it a lot, have an obligation, even when they're just trying to perhaps move up the economic ladder, move up a rung, take their family out of poverty, their first almost 10% goes to feed the government instead of feeding their family in payroll tax withholdings. And it's just unconscionable. And that payroll tax is over 40% of our Treasury's tax receipts, and it's the most regressive at all because it's flat, it's not progressive in rate, it's flat. That completely goes away with the fair tax. The working poor get the prebate. So if you're spending at about the poverty level, you're paying 0 income tax. And if you buy anything used, actually a negative tax rate. I love that about the fair tax.
All right.
Yeah. So last thing, Bob, education. We talked briefly. College education. It's I call it the one asterisk in the Fair Tax Act. It's viewed as an investment. You're not paying tax as you write your check to the University of Alabama for your grandchild or your daughter or your son. You're not paying the fair tax on top of that, which, when you think you're using pre-tax dollars, education cost is almost half as expensive as it is now when you really crunch the numbers on, not paying any income tax, using pre-tax dollars, and not paying any tax on your educational expenditures. What have we seen in educational expenditures in the last 20, 30 years? through the roof.
Through the roof.
FAIRtax actually helps with one of our largest problems in America on post-secondary education expenditures. This thing is a winner across the board in many unexpected places.
All right. Well, I thank you so much for our little excursion into Walle's world. We'll have to do it again sometime.
Hey, Bob, one last thing.
Yes, sir.
I love your episode 176 on FAIRtax Power Radio. You guys had the FAIRtax guys. I think Elaine Malero needs to grab Vicky, your wife, and have the FAIRtax Gals Power Radio station.
Elaine's laughing at me as you say that, but we'll be doing this again on a regular basis. And again, thank you so much for your expertise, for your support of the FAIRtax, and we look forward to talking to you again soon.
Thanks, Bob.